some of the statements, obviously, they come from your speech, Dominic. And the first statement, can I have it on the screen, please? It's there. Okay, wonderful. Thank you very much. The strong focus on shareholder value has to end. That's a very clear statement. It has to end. We have to stop it. It's wrong. I'm just curious. There's over 300 of you here, decision makers. Who agrees with the statement? Green, if you disagree, red. Wow. Sorry? No. You can see yourselves. But I'm just curious. There's lots of green here. If you agree, you put up green. Yes, you agree. If you disagree, you do not agree with the statement, the strong focus on shareholder value has to end, red. Rutger still red? Rutger Koopmans. Then I want to learn from you why. There's an overwhelming majority green. Rutger, former banker.
I agree that you have to focus on more things than shareholder value. But if you don't have the shareholder value in mind at the bottom line, then you don't know where you're going to end up. Shareholder value remains the great way to measure whether you do things right. On the course of doing things right, you have to focus on other values as well. I agree with that. But don't let it go out of sight.
Dominic, you understand this worry?
Yeah, I do. I think the notion is if you don't, I think what we're also saying is don't not focus on shareholder value either, because then I think you don't know where you're going to end up. But the way I look at it is it's shareholder value plus stakeholder value, and you're going to have better shareholder value if you focus on stakeholder value, if you know what I mean. So if you just said stakeholder value without shareholder value, I wouldn't agree with that.
Yeah.
I think the way you define how you build shareholder value has to incorporate stakeholders. That's how I would say.
But also, for example, he's been mentioned as an example now a couple of times, Paul Polman. He promises all kinds of things, sustainable buying program 2020, improving the hygienical living circumstances over 1 billion people. But he also promises to double the value of Unilever in the same period of 10 years. So it's the combination. Danny, you nod your head?
Yeah, well, I'm fascinated by this statement because it's not neutral. Well, you're saying the strong focus on shareholder value has to end. I think we all agree that there need to be a strong focus, but my personal opinion is that it doesn't have to end because thanks to technology, consumers are more than ever able to regroup themselves. We see that from globalization, people gather in regionalized networks. And I think that we will see the same thing with 3D printers. Because of the 3D printer, the industrialization will end and lead to micro-industrialization. So no, for me it doesn't have to end, but it might mean the end of these companies because they really, really need to be aware of the greater becoming power of consumers. And I wanted to say one more thing. You didn't ask me to react on Mr. Barton's story in general, but I think that most of these companies, they have, of these corporates, they have not enough focus on the short term, because this is what we saw in lots of industries. The music industry, they were not changing. If you see how Apple changed the business models for large industries, if you see how Waze, it's a startup from Israel, founded in 2008. They didn't need a teleatlas, which TomTom bought for a lot of money, because the users of this navigational software made the maps themselves. So I'm not afraid for companies that wants to have a strong shareholder value, but I'm afraid that in the end they will lose this battle.
Hala.
Well, actually, I'm curious to know how many of the people that use their green card are shareholders themselves.
Most of them are. If they are,
so maybe can we redo the poll?
You want to redo the poll? That's fine, Hala. Just how do you want to redo the poll?
Like a second selection of those of you who have just used their green card. How many of them are shareholders themselves?
Well, most of them. They all are more or less because they are members of pension funds and. No, not active shareholders, but so why did you want to ask, why did you want to know this?
Well, because I can imagine that you may answer this statement in a different way when you are a shareholder yourself. because then you might be concerned about the profit of the company when the CEO would have different focuses than only on growth and profits. I think I'm glad. So I think if we build on this majority of people agreeing with this statement, I think what you have been arguing for, Dominic Barton, is a kind of social contract between businesses and societies. And in my understanding, social contracts are always about trade-offs. So what are the trade-offs that businesses should make in this case? And what do you expect from societies? Because I think there is a sort of mutual interest in this.
Well, I think it's a great point to make. There are some trade-offs because I think you could run a very efficient company that's focused on shareholder value, which means that you would probably compromise on a lot of things. It could even be safety and so forth, right, to drive it. And if I give you an example, if you think about the cola companies, right, Pepsi, Cola, or Coke, it apparently takes 2 liters of water to make 1 liter of cola, right? Now, if you're operating in India where there's a shortage of water, you could say, you know what, I'm going to pay for the water, I'll do what I want to do, and I can just make it work. You saw both those organizations spending a lot of money figuring out how to get water to be used more effectively in those communities where the water was, because it cost them more. Yes. It cost them more per liter of Coke, or because they had to do it, but they did it because if they didn't, they'd probably be thrown out of the place in a while. So if we took the lens of efficiency or optimization, we'd say just do it. Make the money. You don't need to spend your time putting in this infrastructure. So I think there's those types of things where it's short term. The other one I was going to say, you make a good point about the short term disruptions, but I think one of the challenges of why companies can't deal with disruptions, and I look in the mirror when I say this at McKinsey too, it's hard to cannibalize yourself because you end up affecting short term earnings. You often have to attack an existing business to be able to do it. And if you're quarterly driven, you're not going to do that. I think if you're long-term driven, you may be willing to have a portfolio that does it. It's probably too simplistic of an answer, but I do think that, again, having a long-term view gives you time to be able to shift portfolios. And organizations like Kodak and others that didn't, they saw, I think one of the challenges was how do you deal with the short-term pressure of that conversion?
What might help also is take your company off the stock market. And when I came in here, I met Mark van Gelder. Where are you? Because Mark van Gelder, you took the company which you are CEO of, Mekic, formerly known as OPG, from the stock market.
That's correct.
Last year. What did it bring you?
A longer-term focus. And I disagree with that. Not all shareholders are long-term. We had long-term shareholders like Templeton Fund, but that was 50%. The other 50% was hedge funds, and which really are influencing our decisions. So not the long-term shareholders, but the short-term shareholders. Mm-hmm. And what we wanted some rest. And
did you get the rest? Did you get rest?
I got some rest.
You've been a year.
Rest.
Some rest.
Can you hold us a little bit away?
Yeah, we want to. You get nervous from the microphone.
You push it in my mouth.
Yeah, we want to hear what you have to say. Yes. Yeah.
But I want to make a point to Dominic Barton. I think also, if you look at our private equity, your focus is not quarterly, but it's 5 years, right? It's a 5-year focus. You always have a certain timing to your decision making. And I think someone who has 20 years, that is not realistic. I think 5 years is realistic, maybe a little bit more than that, but that's it for every CEO. Do you agree with that?
I think it depends on the industry, right? I think there's a cycle. I mean, I agree with I think private equity is actually more long-term than people give them credit for, and they play a role. But if you're in pharmaceutical, I find it very interesting looking at Roche and what the time frame they operate on developing drugs, and that might be a 16-year time frame to be able to do it. If you're in the cell phone business, that's probably a shorter time frame. So I think you have to look at the industry a bit as to where it is. So I should be careful about saying it's X or Y. But I do think in some industries there is a slightly longer time frame. But I would take 5 any day of the week, given the quarter, which is the.
But the main topic you try to raise here is that there's more room if you're not listed on the stock market. If creating shareholder value is not that aggressive, that there's more room for long-term investments. Is this actually occurring at Mekic at the moment?
We're only half a year private, so.
Half a year private, but still,
do you see? For the moment. But
yeah.
I do see that we can focus on. We're making right now a blueprint for 5-year blueprint, which is something different than when you're on the stock market.
Your board.
And my point is not the board. I think it's the shareholders, and I think you got a very good point with investors. But I think you have to segment your investors.
Yeah.
And I think it's a dream if you think that those 3 large investors are going to make the difference. You need a much larger investor base to make a difference.
Just on that,
Thank you.
One example that you triggered. I remember, when Telefonica, this is back in 1999 or 2000, they converted effectively from it was sort of government-controlled retail. And one of the things the CEO did the first things was to change the investor base when they privatized it, is to get rid of basically retail short-term and hedge fund investors, and went out actually to people like the Capital Group, people who had the same time frame that he wanted to have to be, because he said, this is going to be ugly. It's going to be an ugly journey. We're going to have a lot of there will be strikes, there will be actions that will occur, we're going to be big investments, none of the lines will be straight. Will you back me on a journey?
Okay. Thank you very much. Thank you, Mark.